In this video, I'm going to walk you through how I made $126 in literally 30 seconds by selling a covered call on RIOT platforms. So if you guys aren't familiar with the covered call, it is the ability to sell your shares at a predetermined price at a predetermined date. And for that right, the option buyer of your call will pay you, in my case, $7 per contract at 18 contracts, so 1,800 shares equals to $126. So let's just break down what we did here. You can see here that I am looking to sell my 1,800 shares of RIOT for $9.50. Apologies here for writing, by October 18th, which is 7 days away. And I got paid 7 cents per contract, which again, if you times that by 1,800 shares, it's $126. Now, what does that mean in reality? So by October 18th, if RIOT is below $9.50, I keep my 1,800 shares and I make $126. If RIOT is above $9.50 at the date of expiration, which is October 18th, I will sell my shares at $9.50 and keep my $126. So effectively, I keep my $126 regardless of the outcome. Now, the key question here is what is my cost basis of RIOT? Is it above or below $9.50? Because if it's below $9.50, then if my shares get called away at $9.50, I will not only make the $126, but also a profit on the shares that I've sold. Now, my cost basis is nowhere near $9.50. It's actually I think it's around like $12 or something along those lines. So in theory, I don't really want RIOT to go to $9.50 or above by October 18th. Now, in the rare occurrence if that happens, and we'll look at how much RIOT has to move to get to that in a second. If that does happen, what I do is I roll the position. And effectively what that means is that I roll the current option that I have, i.e. I buy it back for a loss, and then I will roll it into a new expiration and I'll get paid more than what I bought the option back for, therefore give me what we call a net credit in option trading world. So therefore I'm buying myself more time to be right, i.e. making sure that whatever my new option that I have, it is above $9.50, or if I push it up to $10, it really depends on the price and what's going to happen. So what is the likelihood that RIOT will actually get to this? We'll get to this position. So if we have a look here, that RIOT is actually trading at $8.40 currently, and I've got the $9.50 strike. So if we do $9.50 minus $8.40, RIOT has to move $1.10 in the next 7 days. Now, if I divide that by the current cost of $8.40, that is a 13% in a week. Now, RIOT on Friday has moved 8% in a day. So the chances of RIOT getting to 13% in a week is certainly in the realm of possibility for RIOT, because we know that RIOT, because it's a Bitcoin miner, it is a very volatile up. So again, I'm not looking for RIOT to get to $9.50. The best case scenario is at $9.49 at the date of expiration, but it can get to $9.50. Now, if that does happen, I will continue this journey with you and show you what I do so you guys understand what happens if this option gets quote unquote in trouble. However, this is a cheeky scalp trade of where I'm trying to get a scalp $126 for literally pressing a few buttons. in there. Now, this trade could go horribly wrong and Riot could go to $10 by Tuesday. Again, we shall see what happens. I'll keep you guys posted. So make sure you subscribe. If it works out, you guys can go check what the Riot price is by next Friday. And again, if I do a video on Riot, you know that something's gone wrong. Or if I do a video on Riot, hopefully it's gone right. And I just say, look, it's nowhere near that, $9.50. And we can continue life as is. And I'll net $126 with the space of 30 seconds work. So really hope that makes sense. If you've got any questions, comment down below. And I should see you guys in the next video.